going on, everybody? Hello and welcome back to Pulse here with the PeakBot team. Dillon here, co-founder, joined by co-founder and co-host Ben, as well as Thomas. Excited to have another week. I have this playing rookie move. I heard my echo. Hasn't been the first time. But we're excited to be back. Going to be looking at a couple things today. Of course, we're going to take a look at some charts, talk about last week, which was an interesting week in the market for sure. We are going to talk through our new bot trend spread, which of course has been live in beta, a couple best practices there. We're also going to talk through best practices when selling puts. So we'll have a couple of discussions there. And of course, we'll take a look at my portfolio. And we have a little bit more information on the Schwab integration, which we'll be very brief on, but need everybody to get some updates there. But yeah. Excited to get into it. Another week of automated trading here. So, Ben, I can kick it to you, and we can start taking a look at some charts here.
Very good. Yeah, let's do it. I will pull up the watch list. First note is we are in full swing in earnings season right now. If you go down our watch list, anything highlighted in blue here is projected to report earnings in the next, I think it's week. We go by week here. So anything with this column with a little blue flag here, that means there's upcoming earnings. You can see, for example, Cleveland Cliffs. I know that ticker is close to Thomas's heart. They're reporting earnings today. Now, we don't have the pre-market or aftermarket indications on here, but just beware as you are setting up your positions. There are earnings to consider. And you can see that on the top of the watch list. Newmont Corporation, ticker NEM. Never seen this at the top of the watch list before. So earnings could cause different tickers to do weird things and end up in weird places. And we don't like that when we're option selling. We like consistency. We like predictability. We like math-based outcomes. So at PeakBot, we typically like to avoid earnings. There's really no upside to trading earnings or really selling options on earnings. So why take on that additional risk if it's not going to yield any higher results? So just a brief note that we are in earnings season, and to consider that as you are setting up your automations. Now, for anybody that's new that hasn't seen PeakBot before, what we're doing is we're automating weekly option selling strategies. And here we're specifically talking about the wheel strategy. And what the wheel strategy is, we sell a cash secured put at the beginning of the week and let that go all the way up until expiration. If that position expires in the money, then we're going to get assigned shares, 100 shares per contract that we sell. And then we're going to then flip that and sell covered calls the next Monday. Now, if we don't get assigned shares, if we expire out of the money, then we just get to collect all of that premium and just move on to the next week and sell a cash put again. Now, PeakBot adds an extra layer of protection on because we are automated. We don't necessarily need to look at this every week, so we do want added protection. We're selling credit spreads. So to start you out, we'll sell put credit spreads. There is still the possibility of assignment, but we're protecting you from further downside risks. So we're selling the 30 delta, we're buying the 10 delta, and that's how we create our hedge here. And I'll move over to the watch so you can see the different deltas and strikes that we could potentially be selling today. Now, this watch list updates every hour, so keep up with it. We do have a timestamp on the watch list. I'll let you know when it was last updated. But this could help you decide what you want to automate, or you can use this for manual trading, right? I know a handful of people that are using this watch list to at least identify where there are premiums as it relates to these weekly contracts right now, and they'll manually trade. So feel free to use this watch list however you like. And then if you do get assigned selling put credit spreads, next week we'll go ahead and start selling call credit spreads. We'll place call credit spread orders on your behalf. And those strikes are set up at the 50 delta and the 20 delta. So collecting a little bit more premium. We're selling a call at the money. We're essentially increasing your odds of, getting that stock, getting that ticker called away, getting those shares called away, to get you back into the put side. The market is inherently bullish. I know that we're seeing a little bit of a bearish trend right now, but selling put credit spreads is a bullish strategy. So we typically want to be on that side, moving with the market versus against the market. However, either is fine. Both of these have a neutral component to it. Both sides of the strategy have a neutral component. Um, so it's very beneficial to trade in many markets. So we've got a couple of stocks lined up that we wanted to pull off of this watch list. I wanted to bring up JD. JD's been bouncing around everywhere for the past couple of weeks. If you've been tuning in, you've seen JD at the top of the watch list for a while. You've seen JD at the bottom of the watch list because it was getting frisky. Now we've got it back into the lower category. We're in a neutral trend. Perfect. I'll take a look at what other indicators have to say about that trend. Um, it looks like our max loss here is about $100, and we're estimating to earn about $12 when needing about $2,400 in cash secured to make this happen. So about a 0.5% return on the cash needed to secure the trade. So if we take a look at JD, I'm going to pull up my Tradier account, zoom in here a bit. When looking at these tickers, I like to look at the month chart. And, this chart, I could see why the PeakBot indicator is saying neutral. This is kind of looking a little bearish to me, just looking at the chart. However, what we're doing at PeakBot is we're looking at exponential moving averages. So that moving average might be just taking a little bit longer to get towards this bearish trend, but it definitely does look a little bit bearish. So if I am on the call side, then this would look favorable for me. I'm going to look at this technical analysis tool, look at 1 week, and we can see that there's 14 sell signals, 8 neutral, 4 buy. If I look at the sell versus the buy, obviously there's 10 more sell signals than buy signals. So overall, it looks a little bit bearish. Looks like, if you're on the call side, you'd prefer to be on the call side for these particular trades. But again, there's a neutral component of this strategy. It looks like the low of the month hit, about a week ago at 24.65. The put strike that we'd be selling would be the 24.50. So we'd have to create a new low this week, which could, of course, happen. But for that to expire in the money and for us to actually lose on this trade. So that's JD. And I did note at the beginning of this call, this show, that we are in the middle of earnings season right now. So if you want to avoid earnings and you just want to avoid it completely, never have to worry about it. There are a number of ETFs on this list here, and you don't have to worry about earnings with ETFs. So I wanted to highlight the TQQQ. This is an ETF basically on the SPY, or on the Qs, sorry. We can see that it's higher risk right now. It typically lives around this higher risk category. We'll see it higher risk. We'll see moderate risk. Rarely will it find its way into lower risk, but higher risk, higher reward. We're seeing that with just $4,700 in cash secured, you could earn $62. That's a 1.3% return on cash needed this week. And if we look at the trend, now this is going to look very similar to what the market's been looking like. So I'll show the month. We've been in a bearish trend over the past couple of weeks at least. I know it's at neutral on PeakBot. Again, those EMAs are probably taking a couple more days to catch up, and then that'll probably flip to bearish. But we are on the bearish side here. So if we turn this into the week, we've got 10 sell signals, 10 neutral, and 6 buy. So again, the sell to neutral is looking pretty strong. If you add those up, it's 20 to 6. And if you're on the call side of this strategy, which you definitely could be on trend spread, we'll talk about trend spread in just a bit. But trend spread, you don't actually have to own the shares. On the wheel strategy, you do have to own the shares. So completely up to you how you want to play this. But it definitely does look like we are trending downwards right now. One thing I did want to also point out is you can take a look at our results page here. We talk about this every now and then, but we don't really show it on our live streams, at least. I don't know why. We should more often. But if you're on usepeakbot.com, just click on the results tab here. It might take a minute to populate. It's pulling from a Google Sheet. But what this tab is showing you is what are the tickers that have been traded in the past with PeakBot? What have we automated in the past? What's the current stock price? What's the win rate And this is going by week. So it's important to note how many weeks this ticker was traded. So for example, Shopify, whoever's been in on the 14 weeks that this has been traded, looks like they've won every single week. So Shopify, good track record. Of course, past results are not indicative of future results, but interesting to see these statistics. I like to look at the ones at the tickers that have been traded like 20 weeks, right? So like NVAX. Now NVAX is a little too low in dollar value for my liking right now, but it's got a 90% success rate in terms of coming out with a profit. And if we look at the average return on winning trades, we're looking at like a 1.4% return, which is phenomenal. I'm looking here at Beyond, ticker BY, Bed Bath and Beyond, ticker BYND.
I think that's Beyond Me.
Beyond Me, you're right. I'm thinking BBBY, and I'm like, I think they delisted. So, so Beyond Meat, look at that return. I mean, 2.6% on 25 weeks on average, 88% success rate. So again, interesting just to come in here and look at the past statistics, see how tickers have done for others that have been trading. And then Thomas updates this every week, what moved the markets last week, what's happening. You can get a little bit of information, and we just pulled this from JH Investments. You could go there to get your news, or we'll just paste the summary in here for you guys. So yeah, use all that information as you wish. What we talk about on this show is not financial advice. We're not financial advisors. However, we do know put credit spreads, call credit spreads, iron condors really well, especially as it relates to weekly premiums. We know this watch list really well, to the point where, I could look at this in 1 second and say, ticker NEM hasn't been up here. Futu hasn't been up here. BP hasn't been up here. Morgan Stanley has been up here a couple of weeks, and so on. So check this out every week. You could see what stocks are, on the lower risk level, get an idea of the trend that they're in, and use it as a tool to help you make decisions. And of course, if you don't want to make those decisions, create a PeakBot account, sign up for a 2-week free trial, and we will automate those trade placements for you. So that said, unless Dillon and Thomas, unless you guys wanted me to pull something specific up on a chart or look on this watch list, Dillon, maybe you're on the fence about a stock, I'm happy to hand it off to the next segment.
You know what? Actually, I am. I would be interested in taking a look at ticker AA, Alcoa Corp. If you want to,
Okay.
no need to, but I'm thinking about adding that into my portfolio this week after taking a look at, I was actually trading JD last week as well as Lyft and Uber, which probably going to drop JD and Uber. So I want to see if we can fill in with Alcoa. The reason why is, as you can see there, Ben, you can pull it up if you want, but it's a bullish moderate paying 0.65%. The spread's only $1.50. And what I like about it is the stock is currently trading more than $1.50 above our sold strike, only by 3 pennies, but it's trading at $35.53, and the strike price is $34, and our spread's only $1.50. So I like that. What do we see about the chart here?
Yeah, so looks like pre-market Alcoa Corp is up, and if we look at this $34 level, looks like we kind of topped out at that price back in December. I'm going to switch this to the 1 month chart. Looks like over the past 2 weeks or so, 3 weeks, we've been in this pretty tight range, dipped down to $34 just once. I'd say this is definitely a more neutral looking chart than the past couple that we looked at for JD and the TQs. And if we look at the technical analysis tool, turn that to a week, we do have 11 buy signals, 8 neutral, 7 sell. I've got an analyst report pulled up on my other screen here. I'm seeing that 13 analysts are reporting on Alcoa. About 23% are calling it a strong buy or a buy. 46% are calling it hold. And then about 30-ish, a little over 30% are saying underperform or sell. So do with that information as you wish. But the data is all there for you to take a look at. The technical analysis tool is indicating, buy and neutral are looking pretty solid this week. The premium seems right. Let's take a look at history for Alcoa Corp, because I know that people have traded this. Yeah, see, look, 24 weeks Alcoa has been traded. And again, this date is only from the beginning of Q4 in 2023. So since then, Alcoa Corp has been traded by PeakBot traders 24 weeks. It has won about 80% of those weeks and returned an average of 1.03% on cash needed.
I like it.
So yeah, pretty cool to cross check that across. It looks like it's paying out a little bit less in premiums than it has in the past. But with $1.50 spread, $150 max loss, that's that's a pretty tight spread, especially considering the dollar value that this is trading at. I like it personally. Dillon, when you're looking at stocks that you want to automate, how much emphasis do you put on this maximum loss column here?
When I'm trading the wheel strategy, I put a good amount of emphasis on it. I want a stock that, is staying in check. I like to stay on relatively lower volatility. Now, with the trend spread bot, for anybody who might not be familiar, the trend spread bot, I take a slightly different approach, and I don't mind a little bit of volatility because with trend spread, we're rolling contracts weekly, which means I'm not getting assigned shares. But with the wheel, Ben, go down the lift on the watch list here. So it's in moderate somewhere. Okay, it's actually in high. So with lift, as you can see, we got another situation where the spread is only $1. So we're risking only $100 here on the put credit spread. Yet the stock's trading at $16.15 and our sold strike is $15. So I have more. I got $1.15 worth of breathing room to get to my strike, and the spread is only $1. I like that. Again, look, I'm the layman of the group here. Thomas and Ben are certainly more the technical traders, but to me, I'm like, well, I have more room than the spread is even asking for here. I like it, right? I've been trading lift for the last few weeks, and I'm probably going to continue that. And maybe this is a good segue into taking a look at my portfolio and making a change. So, in fact, I'll pull up my screen here. So, with last week, I had owned 100 shares of JD last week. So I had sold a call credit spread on JD last week. It expired on Friday, and the shares were sold away. I also ran 2 put credit spreads on Lyft and 1 put credit spread on Uber. So we already kind of looked at JD here on the watch list. It's neutral lower, paying $12. I don't love where it's at, to be honest with you. I'm actually going to drop JD, and the other stock I'm actually going to be dropping is Uber. Taking a look at where this is at, it's trading at 69.20. Neutral trend. By the way, just a reminder, our trend is based off of the 67-day EMA, so essentially the 3-month EMA. But we got a $3 spread, and our strike price for the put is $67 at the 30 delta. So it doesn't suck. It's just like I'm not in love with it this week. So I'm actually going to be I'm going to be dropping Uber and JD. So I'll just click on those, click edit status, and remove. And then I'm actually going to add Alcoa Corp, and I'm going to add another contract to Lyft. So I'm going to do 3 on Lyft this week, and I'm going to do 2 on Alcoa Corp. So in fact, I'll delete Lyft and re-add it with 3 contracts. So I'm doing a little bit of a rehaul here with my wheel portfolio. All I need to do is hit add new stock. And let me slow down for anybody who's newer here. If I want to add stocks into my automated portfolio, I got to hit add new stock, select my bot. I'm going to select the wheel. I'm going with Lyft for 3 contracts. So all I got to do is put in my budget here, 3 spreads, activate, agree, and then I'm going to add 2 Alcoa Corp. So I'm going to punch that in here, and I should be ready to rock and roll here. Now, this fills up my wheel portfolio with just over 11K that I would need in case assigned. My PeakBot budget here says NAN because we're in testing with the trend spread bot, which isn't pulling the capital needed for a couple of these down here. So pay no mind to that. But that's my changes for the wheel this week. So I'm staying with Lyft. I added an additional contract. So I'm going to be selling 3 put credit spreads there and 2 put credit spreads on Alcoa Corp. Now, with my trend spread bot, in beta testing right now, if you wanted to change up your position, you would be doing so manually. When we launch it, it will have the ability to close out for you. So I'm going to keep rocking with Carvana, DocuSign, Net, which is Cloudflare, and then Wayfair. Just so everybody knows, I am in a Iron Condor expiring on the 26th for Net and Wayfair, and I'm in a rolling put credit spread for both Carvana and DocuSign. I'm collecting a lot of nice premium here between these four contracts. So that's my update for the week. So yeah, look, transparently took a beating last week, right? Weird market. Obviously had a little bit of quite a pullback, but going to keep rolling with things here. Again, the most important thing is to trade stocks that you're comfortable owning and that you believe in the long run. And if you can do that, you can limit your emotions. Although you are trading with a bot to place the trades for you, you still have the ability to get emotional and come in here and shoot yourself in the foot. Try not to do that. Not financial advice.
Yeah,
but
these strategies are based on, I mean, there's math behind them, there's theories behind them, and theoretically, right, if you let these strategies play their course over a certain amount of time, what you think is going to happen will happen. Now, it might take a long time, and that's why patience is key, especially as it relates to trading. But we won't get too nerdy into it. But if we ever wanted to have a segment on like law of large numbers or central limit theorem, we could definitely do that. But that's how we're those are some of the mathematical rules that we're basing these strategies off of.
Yeah. And look, we could speak to it very briefly, and we should probably get into it more. But look, for the wheel strategy, we're selling the 30 delta. Okay, so statistically, and that's for the put side of things. So statistically, with our put spreads, our win rate is around 70%, right, on paper. So the whole idea and why Ben mentioned that this is math based and statistical based is because it's the coin flip analogy, right? We've been talking about this a lot as a team the last few weeks. You flip a coin 5 times, you might get tails 4 times or 5 times, which we know on paper isn't necessarily what's expected to happen. But you flip that coin 100 times, 1,000 times. There's a 50% chance that you're going to get heads or tails each time. So the more you flip that coin, the more you're going to come back to that average. You flip a coin 1,000 times, it might not be exactly 50% heads versus tails, but it's going to be damn close, right? So that's the whole idea here. And it's the same thing with our probability and our win rate. You trade the 30 delta, enough times consecutively, you're going to end up with the win rate roughly around 70%. So then it just comes down to smart stock picks. And again, teach their own. You want to be an investor or you want to be a trader? So depends on how everybody likes to approach it. But yeah, that's my portfolio for the week. Hopefully going to have some recovery. I know I'm collecting rent in premium, and we're off. So maybe we take it to Thomas. Thomas, I'm just curious. I know you moved over your primary account that you were trading the wheel on. You moved it over to one of our other broker partners. Are you still actively trading the wheel? And if so, what are you working with?
I'm not actively trading it at the moment. I do hold a couple of shares of Pfizer, not a couple of shares, a couple hundred shares of Pfizer that I'm just having sit in my account. I haven't gone around and traded it. I've been doing so much other stuff. And a lot of it, of course, has been on Tradier. So just letting that go. And then once we're up on the other broker partner, then I'll be back on the wheel.
Thomas is big time into trend spread right now. Thomas is running our beta groups. If anybody's on here and they're like, what is this trend spread thing? Why don't I see it on my PeakBot account? It's in beta right now. Thomas needs to give you access.
Yeah.
If you ask him nicely, he might give you access.
And there's a number on the screen. Thomas, summarize your experience with trend spread so far. And
Yes,
we're
so-
transparent here. What have you seen?
And if you want to, Thomas, pull up a chart or something so we can visualize it.
The chart's not updated at the moment, but
Well, you can
I'll
show, and then we can talk through the part that's not updated.
yeah, so let me get that going. But while I pull that up, so with trend spread, your account can go up very quickly and your account can go down very quickly. Just like any other strategy there is, you're able to take losses. It's not going to be the best way. There's going to be stocks and the market's going to drop like we saw this past week. And trends can change, right? The market was nothing but going up. The S&P hit almost 530, a little bit above 520. Now the SPY is down to like 496, I think, last time I checked. So when you see those big changes in trends and things like that, a lot of those high beta stocks are going to follow. So when you start trading stocks that they have high betas and they can drop just as quick as they go up, that's when you're going to start to see those those realized losses on trend spread. You're going to see the chart here, and I'm just going to go ahead and share my screen real quick. 1 second. Right here, share. And then now my screen should pull up in just a second here. But you'll see from March 5th, 2024 to April 5th, 2023, my account went pretty much straight up. Here it goes. My account went pretty much straight up. Right now, my account dropped quite a bit this past week after the big market drop. A lot of it came from stocks like Uber, Occidental Petroleum, those bigger companies where the market just kind of took them down with it. So with that being said, one thing I want to talk about a little bit with earnings season is don't get stuck in the high premiums. And I'm just going to pull up the watch list as well. I think I'm sharing a tab. Don't get wrapped up.
There will be a new watch list. There'll be a new watch list coming out for trend spread specifically. But as of right now, while we're in beta, we're just using the wheel watch list because the strategies are kind of closely related. And it'll give you a good idea, at least, of what premiums are.
Exactly. But one thing that's going to be really important is don't get wrapped up in the high premium, the high volatility. That's all nice until you take that big realized loss and you're sitting there and you don't really know what to do, right? So there's going to be stocks on here like Exxon that it's paying 0.44%. It's a really good company, but it's on earnings, right? So that premium is not going to be sustainable in the long term. Something that a lot of people might remember watching this is that drop from UPST, almost a year ago, but it was trading at $72 a share, dropped down to like $33 a share right after his earnings call, and the stock's never recovered. So now anybody that got assigned at say $70 a share is still holding that stock and is never going to see, the recovery that we hope for. Of course, you can continue to sell premiums, but it's going to take you quite some time to get back there to that $77 share mark.
And that's why we sell spreads too.
Yeah, and of course, and that's why we sell spreads to keep it hedged. But sometimes you just kind of you hold the stock 1 week and then the stock continues to fall back. And then even then with something like FCX, and again, none of this is financial advice. Some of these aren't going to be the highest of the high quality companies, and a bad earnings report can really do a lot in the long term. So kind of doing your homework on some stocks and not just picking based off the premium. A lot of people just say, the premium was high and I had enough cash in my account to do it, so I did it. But is that really the smartest move? Probably not. Do a little bit of homework. Don't be shy. Do a little bit of learning. It's great to learn. A lot of people like it. I personally like it. And I think that's something that's really, really important when you're picking any stocks, trading, investing. That's really something that you should be looking at. I know I went on a little bit of a tangent there, but
since nothing like Dillon's tangents.
Yeah,
that's nothing. Don't get me started.
Yeah, no. When you talk to customers on a consistent basis and you hear how they're picking stocks, it's like, Again, I can't give financial advice. No financial advice can be given here. But it's a little bit scary sometimes because they're not really picking, the stocks based on any sort of
What are they picking, Thomas?
whatever's paying a high premium. And that's what I've noticed the most. If they have enough cash in their account for it and they see that it's paying a high premium, that's where they went for. So when we had stocks on here like Riot, Marathon Digital, and of course they're still going to be here, but we made a separate category for them. So to help people get away from those stocks like Marathon Digital, Riot, and they did go down quite a bit. Not as many people are trading them. But there's some people that got stuck holding the bag on those stocks. I did on Riot for a little bit, but of course, the nature of its volatility, it shot back up, and I was able to get out of it. Some people, they haven't been able to get out of it, and the stock just keeps dropping, or it might never recover. That's just one thing I want to highlight getting into earnings season. Don't just pick the stock because it's paying a high premium. Do a little bit of homework, do a little bit of research. Like Snap, paying 4.1%, even though it's not on the actual watch list, it's on the removed here. Not financial advice. That premium's a little high. That volatility is a little bit high. Maybe it's best to stay away from it. Not every trade is necessary. A smart trade might be no trade. So that's just something that you have to take a look at there.
Thomas, if you had to sum up like a couple best practices for trend spread, do you have like some bullet points you could give us?
Keep high quality stocks. Go for the lower premiums. It's still going to be the same thing as the wheel, right? Because when you take, it's either going to be a realized loss or an unrealized loss in comparison to the two. So if you take an unrealized loss in the wheel or a smaller realized loss on trend spread, it's pretty much going to see the same movement in your account. So I would say for trend spread, high quality stocks, you have no reason to pick bad stocks. You can trade with just $200-$300. If Amazon goes up, you're trading with the trend. If it's going down, the EMA might not pick up as quickly. So that is something to keep in mind there. So yeah, I would say high quality stocks and picking good premiums.
Yeah,
Right.
I have a couple quick comments on it, and Thomas nailed it at the end there. It's like, look, with the wheel strategy, you have about a 30% chance of getting assigned the shares. So your ability to trade quality stocks and maybe a smaller account gets tough, right? You need 17K if you want to trade Amazon, roughly. But with the trend spread bot, if the spread on Amazon is $4 or $5, now you only need $500 to get that trade activated within your account. And also, look, we're sitting here being on the, chat on the safe side of things, right? We are a automated trading platform providing, a set it and forget it type strategy. So, of course, we'd always like to err on the side of caution, but it depends what your portfolio is for. Look, if this is fun money and you want to roll the dice and you want to take some risks, go for it. That's why we have a watch list and an entire section dedicated to very high and high risk stocks. But if you're trying to treat this more like an investment, with slow growth and, trying to just make, 0.25%, 0.5%, maybe 1% a week on a good week, then yeah, stick to the lower volatility stocks.
Yeah, hey, 0.5% growth each week is 26% growth over the year.
Yep.
That's phenomenal.
Yeah, if all of our subscribers, return 26% at the end of the year, we are very happy campers, and so are they, or at least they should be. Okay, fantastic. I know we're a little past 9:00 here Eastern, so the market's going to get opened here in the next 25 minutes or so. Anything else we wanted to cover here as a team?
Maybe just some quick business updates.
Yes.
We've got Schwab in beta right now. We're testing for anybody who's migrating from TD to Schwab. Schwab is in beta. We will be launching that before the last migration happens on May 10th. If you're tired of Thinkorswim or tired of TD, tired of Schwab, you don't think it's up to par, head on over to Tradier, create a Tradier account. There's a ton of benefits. You could sign up for Tradier Premium, which I'm signed up for as well, and you pay $10 a month and you get commission-free options trades. So if you're using PeakBot, totally worth it to do that. you're going to save yourself so much money on commissions. I've been testing out, I guess this is another business update too. I've been testing out an update to our Iron Condor strategy where we're selling 1 DTE every day. And if I look at the amount of fees that I would have paid on a different broker compared to Tradier when I've got this premium account with Tradier, I'm saving hundreds of dollars in just commissions alone. So it's definitely well worth it. Highly recommended. Tradier is a great partner of ours. We all have Tradier accounts, and Iron Condor updates coming soon.
SPX coming to Iron Condor.
SPX is coming to Iron Condor. More tickers are coming to Iron Condor. Basically, anything with 0 DTEs is coming to Iron Condor. We're not going to trade the 0 DTE. We're going to trade the 1 DTE. But if there's daily expiring options, we are going to add it to Iron Condor. I'd expect all of those updates to be made before June. Right now our focus is on getting trend spread out, getting Schwab out, and then we are going to shift focus onto getting these Iron Condor updates done. And then we might have a few other surprises in the pipeline. We'll let you know next month what those could be. But I think that's it, Dillon, if you want to send us out.
Fantastic. Again, thank you, everybody. PeakBot, automated trading for the everyday retail trader, help save time, eliminate emotion, and give you the ability to stick to a strategy. So put a stock trader in your pocket. Check it out. Go to usepeakbot.com. We got a 2-week free trial. No credit card needed. Text or call us anytime. Give you a demo. We pride ourselves on being available here. You'll get one of these people on our call here today to chat with you. So appreciate you. We'll see you next week, same time, same place. And until then, see you at the peak. Thanks so much.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member FINRA SIPC.